Hello, everyone. Welcome to another session of training with your mentor, RKT Genesis. Today, we're going to talk about market structure. Uh, we're going to talk about market structures regarding price action, right? So, I'm going to give you 5 to 10 minutes to copy this on your notebook or your notepad before we proceed, right? So, let's go. What's up, everyone? What's up? What's up? We're back on this. Back on this one more time. I hope you're done copying all the notes and shit you see on this blank sheet of paper over here on my notepad. So, what is price action? When they say price action, what you think price action is? The analysis to correlate the actually the analysis to correlated assets or the relationship to inversely correlated assets, right? Price action determine what the bank is accumulating or distributing, whether the currency are easily analyzed with institutional market structure with the USD index. Every price swing should be studied to determine if the market symmetry confirms it, right? So those are the aspects of price action you want to see into the market and you want to see the market do, giving you maximum confirmation for you to proceed with your strategy and confirmation on what you want to see, given the higher time frame evolution you've gone through on our prestigious classes, and you think that it's a good buy or sell situation for you to hop into it with the market being your objective of making money out of this market. So yeah, that is what price action is, right? So how do we determine institutional market structure in Forex? It's very simple, very simple. Compare every price swing in the US dollar index with foreign currencies you trade. If the US dollar index or foreign pair fail to move symmetrically, note, and you should note this very well, smart money is trading. The smart money here are the banks. So if the dollar index, when you say when you hear the statement symmetrically, it means the opposite sides. Like if they don't go to the opposite direction as we expect them to go. Note that the banks are trading, right? The banks are trying to manipulate the market. They're trying to do one or two things in order for you to think that they're gonna go the other way, or why they're gonna eventually trick you and reverse in your thoughts or into whatsoever you were thinking they were gonna do. They're gonna reverse to the opposite direction of your thinking, right? As the US dollar index trades lower, expect a higher price in foreign exchange and vice versa. That's what we mean by market symmetrically and stuff like that. So if the dollar index or foreign currency fails to move symmetrically, note again, smart money is trading. Now we're gonna go into the chart. Let me tell you what it means by this, all of this. Yeah, we're gonna note these things here. This little sketch of a graph that I've made over here, like So this is what our focus is on, right? So you see the black lines here means a lot, right? It means a lot. Let me tell you what. So you're gonna see the market. Let's see. This is DXY, the dollar index. If you don't know what the dollar index means, it means any dollar pair correlated to another pair, like any dollar pair crossing, maybe US dollar versus euro, or US dollar versus the Japanese yen. That's the meaning of the dollar index, like dollar X, any currency pair. That's the meaning of it. And when they say foreign pairs, it can be euro versus CAD, euro versus Australian dollar, and it doesn't imply any USD correlated pair when you see the foreign. So if you see the dollar index, like this is a market structure, like this is a price action market structure, right? This is a price. Actually, this is a good price market structure. If you see the market do this, like it creates a low here, right? It creates a low at this area, and then it retraces a little bit and comes back and trade below that low. Most of the time, you see this trading below the previous low as a weak and running sell stops. So once you see this, you see the market reverse on the other side, breaking market structure. That's what they call market structure, breaking uh the previous low, right? As it's breaking the previous low, is employing that what market is about to change direction. And now this is the dollar index. Once you see the dollar index doing this, what do you expect on foreign currency? As USD dollar breaks market structure going bullish, foreign currency breaks market structure on the other side going bearish. So that's what we mean by symmetrical. It means if the dollar index is going bullish, you want to see foreign currency go bearish. If the foreign currency are going bearish, you expect a bullishness into the dollar index, right? So that is what you want to see 9 times out of 10. And you see these things over here out. You see also where you see the foreign is at. You see this line I drew out here, and you see the things go is upside. It's a little box here. This little area here. All these box are always running stops. Running buy stop or sell stop, right? These are always running buy stop or sell stop, right? So this is symmetrical. This is what we call symmetrical, when they do the opposite of what we expect them to do, right? Now watch this. There'll be circumstances where you will see the foreign currency will trade lower, as you see here. Let me edit it a little bit. Foreign currency will trade dollar index will trade lower, and you see yeah, there's some times you'll see the market like this, right? See, foreign US dollar will break, will take out the previous low due to running stops or taking out the sell stops in order for the market to reverse. But in the foreign currencies, you will see a failure in the market to break this market structure as a running stop loss, but a reverse, right? So when you see these things like this, you will see these in most of the time you will see, but these in you see these on the USD dollar index, and you see these on the foreign currencies, right? So when you see these on foreign currency, what is going on? This is what we describe as the banks are trading, the banks are accumulating, the banks are trying to change your strategy or whatsoever mind you have into the market. The banks are trying to diversify your thoughts and put you into the wrong direction and trying to change your mentality or the strategy with which you base off your confidence at, so that they'll take your stop loss or they'll hit your stop loss, right? So now if you're smart enough, you see this and you see this, you'll be like, okay, what smart money is doing is that building contracts, right? And when they build those contracts, is you want to see either foreign currency or USD index give up the ghost. You know what I mean? Like it just collapse or go super bullish, right? You see break, you see dollar index make lower low, but foreign currency is unable to make a higher high, right? So that's what we mean by you want to see that's when the banks are trading, that's when the banks are trying to play us into the market, that's when the banks are trying to tap off uh, stop and reverse or and reverse and do exactly what we thought they were going to do if you try to change your mentality, right? So yeah, I think with that being said, that will be all for today. I wish you good trading and thanks for listening. Thanks for the record. Oh, damn, I almost forgot. I didn't give you examples. I didn't give you examples. Watch this. Excuse me. Um, Let me clean this chat up. Right now, this is what they call the dollar index DXY. Right. Yeah, yeah, right. Okay. Watch this, right? We're on a 1 hour time frame. Let's go to the oh, we see how dollar index has been bearish all this while since 24th of April. Let me put a line here so that more simple for you to understand. So we see dollar index being bearish since 24th April. But if you go to Euro USD, and you want to look the 24th of April, boom, boom, we got our 24th of April. You see exactly what we said we want to see the matrix do symmetrically, right? Look at this box on the euro and look at this area on the XY. So dollar index is what can give you the overall view of trading any foreign currency pair, right? If you're looking just at the uh, if you're looking just at DXY, it can give you the highest probability trades to enter on foreign currencies, right? So look at this. We're here on the 20 on the where I drew this blue line. You see, we're on the 24th of April. You see the market being bearish since the 24th of April to date, right? See the markets went bearish. DXY was very bearish. And if you go to Euro USD, you see Euro USD, uh, Euro USD being bullish, right? Now you see this going on. Come on, you see this going on. That's what I mean. Like that's what I mean for the market doing symmetrical things and going to the opposite direction, right? You want to see the market goes to the opposite direction. If the DXY is bullish, you want to see foreign currency go bearish. If they are bearish, you want to see foreign currency go bullish, right? This is a typical example you see over here. Now we are on our 1 hour chart, right? You see this happening on our 1 hour chart, right? There you go, seeing it happening on our 1 hour charts over here. So once you see this, come on, you want to see the market do the same thing. I think if we go to Euro to the GBP, USD, you see the same thing. If I'm not mistaken over here, we're gonna take this. Let me clear this out. There you go. Let me go to the 4 hour time frame. That's another 24th, right? GBP USD 24th. You see, it was bullish. It's been bullish all this while. It's been very bullish all this while. GBP USD has been bullish. Now I want to see this drop. Yeah, like I seriously want to see this drop, right? Because foreign DXY is telling me uh, we have buy stop, sell stop liquidity instead on the other side, and I want to see the markets collapse because since 24th of April it's been bullish, and seeing my analysis is doing what I really think it was supposed to do. So I think I'm confident with whatsoever I'm supposed to do as a setup over here. And if you hit my stop loss, I don't have any problem with that, right? It's part of business. You don't want to trade or think that you're a guru, you're not going to lose. We are going to lose, right? So you see, this market has been bullish. DXY was bearish, dollar index was bearish, GBP USD bullish from the 24th, Euro being bullish from the 24th. We see when DXY can define all of your other trades, right? That's what we meant by being symmetrical. Like DXY, if DXY is bearish, foreign currency will be bullish. If DXY is bullish, foreign currency will be bearish, right? So when you see that, you'll be looking for sales opportunities on foreign currency instead of buying opportunity. But there comes the part that we said. We said that there will be times you will see your dollar index being bullish, or you see a break in market structure on the dollar index, but on the foreign currency you will see them failing to break that area. It doesn't mean your direction of bears is wrong, but now what we said is the market the market are accumulating at that particular time. The market are accumulating like here. When we say accumulating, this is what we mean by the market accumulating. When the market is accumulating, you see this in the market, right? This is how the market accumulates. So the market is accumulating, and